Welcome to 3 and 3. My name is Jason Weaver. Today we're going to be talking about flat yield curve, dividends, and earnings. So flat yield curve. So it happens when short-term and long-term bonds of the same credit quality see no discernible change in rates. And typically it's an indication that investors are worried about the macroeconomic outlook. In our current state, the aggressive Federal Reserve has actually caused most of the recent flattening. If you look historically, you can see that typically, if you're looking at a 10-year minus a 2-year bond, there's going to be some spread between the two. But currently, we only have about 25 to 30 basis points between the 2-year and the 10-year bond. Dividends. Dividend-paying stocks act as a good hedge against inflation. You get real return in the short term for the cash flow that those companies are paying you in a dividend. Stocks that were tilted toward value or dividends did the best job at mitigating downside for the first quarter of 2022. As we look historically, back when we had higher periods of inflation, like the 40s, 50s, 60s, and 70s, dividends accounted for a high percentage of your overall return, as much as 73% of your return in the 1970s. Whereas you look at during the 1990s, 2000s, 2010s, where we had lower inflation, dividends accounted for a less percent of your overall return. But going forward, we expect dividends in the 22 and 23 year to be more important to providing that overall return that we're looking for as an investor. So looking at year to date, the yellow line is a high dividend paying fund, whereas the actual red line is just value stocks in general. That bluish line is the S&P 500, and that purple line is actually growth stocks. And growth stocks have underperformed dividends and even the value index. Earnings. Earnings in 2022 are expected to be 9 to 10% higher than 2021. And much of that is coming from revenue growth, which in the S&P is projected to be about 9.3% higher. That's also very company and sector specific, as you'll see. Energy, industrials, and materials will have the highest earnings growth for the first quarter of 2022, whereas you're seeing communication services, consumer discretionary, and financials having the lowest actual earnings expectations. As we look at revenue growth, you can see the correlation as energy, materials, and real estate are supposed to be some of the highest revenue growth areas in the first quarter. And again, consumer staples, financials, and utilities being some of the slower growth areas. Thank you for joining us for 3 and 3.